You are listening to ChartingWealth.com's comprehensive review and forecast for the week beginning Monday, June the 5th, 2017. Alarm bells are ringing. Ding, 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 ding. What do we see going on? All of our charts are up, but there is a weekly vertical crossover for Friday, the 2nd of June on the S&P 500. It has been a long time coming, but it has finally happened on our weekly chart. It took quite a while. We had the weekly vertical crossover going down all the way back there at the end of March. Market slid sideways and down and then tried to recover. It has taken it a long time to do that. We saw the 2-day chart crossover going up back on the 25th of May. But it took a while, all the way until early June. We do have the derivative oscillator is in the positive, and the PPO is also moving up strongly. Chart was up for the day 0.32%. And again, what does that weekly vertical crossover mean? It means that on Monday morning after idiot hour at 10:30, you look and see how the 2-day chart is looking along with the 4-hour. If those charts look good, they are in an up moving direction and strong, have recovered from any losses potentially at the start of the market. Then if you feel good about it, do an entry point there at 10:30. If things are looking bad, charts are going down, then you wait. But again, 10:30 is typically our entry point on weekly vertical crossovers going up. Cautions, here's one thing that we noticed. We have what's called a divergence. The market actually peaked previously before it rolled over going down back on the 17th, the week ending the 17th. And in fact, we had a higher PPO than we have now at even a higher price. That is what one calls a divergence. It really hasn't happened in the recent past. Every time we've reached a higher high, or a lower low, we've actually seen our charts go down and parallel each other. When the PPO went down, so did the stock price. When the PPO went up, so did the stock price. We've now got a higher high than previously back on the week ending the 3rd of March, but we don't have the PPO hitting a higher high. We actually have it lower. That kind of divergence typically means, for those of you who have read charts for a while, that is not going to be sustained. But again, just a caution there. Pay attention. See how things look on Monday. Look to get in. Now, those of you who have signed up for our notifications via the text reporting service, you of course will receive that. If you've not signed up for that, you need to do it. How do you do that? Well, first thing you do is you go to the website chartingwealth.com. You sign up for our daily email. Instructions will be there on how to sign up for free to receive our stock alert via text message. It can help you make tens of thousands of virtual dollars in your practice trading. So please learn what weekly vertical crossovers are all about. Also at our training at chartingwealth.com, one of our most popular training videos is on vertical crossovers for big wins. Check that out, vertical crossovers. Okay, let's keep moving through these charts rapidly. What do we see going on the Qs on the weekly? Well, the Q shows the weekly continues to boom up since we had that crossover going up back on the 28th. We entered it somewhere that following Monday after the week ending the 28th of April at about $34. We're not quite $10 up. We're about $8.17 up. That's the magic of weekly vertical crossovers when they work. Do they always work? Not always, but most of the time. And when they don't work, get out, take your small loss, and wait for the big win next time. Okay, let's keep moving through these charts. That's where we are. We're watching, continuing to expect on the the NASDAQ 100, which is the Qs, things to continue to go up. We're still above both the weekly, way above the weekly trend line, and nicely above the 2-day trend line also, with that 2-day chart rotating around going up. after that scare that Wednesday where we had the knockdown in the market on the 17th of May, we saw things turn around and start booming back up with the two-day crossover on the 23rd of May. Things have been beautiful ever since. PPO's actually spiked up over the last two-day candle even higher. So keep a lookout for things to continue to go nicely on the cues. If they change, follow us every day. We'll let you know. Let's keep looking at these charts. Like I said, every one of our charts is up today. The biggest move up is in 20-year bonds, up 1.18% for the day. Where are we in 20-year bonds? We are in them. We had a weekly vertical crossover all the way back at the beginning of February this year. And of course, we had that two-day crossover occur again on the 19th of May. We now have our third week of strong up movement. Charts closed above the weekly trend line. Derivative oscillators gaining energy, as is the price percent oscillator. Things are looking beautiful. Let's take a look at the two-day chart. What do we see going on? Continued up movement. We've connected about 3 candles there. Price percent oscillators booming up, as is the derivative oscillator. Things are looking nice. We had that two-day crossover going up back on the 19th. After many days of down movement, things turned around and are looking quite nice. All right. Our last chart we're going to go to is gold, up 0.75% for the day. Gold's been an up move since the weekly vertical crossover back on the 27th of January. Went up for a while, down for a couple of weeks, ending the 10th and the 17th of March. Then up until about the 21st of April, down for 3 weeks. And for the last 3 weeks, been going up nicely. When we look at our two-day chart, we had that two-day vertical crossover back on the 26th of May, and we have seen continued nice up movement and appreciation. PPO's flying up, as is the derivative oscillator. Let's look at our prescient 4-hour chart. It bounced off the red line again and moved back up. Strong movement up in the morning and the afternoon, well above the two-day and the weekly trend lines. Things are looking beautiful. Well, folks, that's where we are as we end the week and go into this first full week of June. We told you yesterday, for our fans, we've had a lot of people already sign up for what we call our biggest chart of all, and that is the quarterly chart. For those who are watching, not just listening on iTunes, but if you're watching, what we actually are showing at this point is a 20-year chart of the S&P 500. And we can see every time we had a quarterly vertical crossover, you would have gotten yourself out of all of the killer down moves in the market, and you would have gotten yourself into all of the killer up moves in the market. We're getting ready to offer a special class for folks who are interested in learning how to utilize this quarterly chart for long-term wealth appreciation. Now, we are not a stock calling service. We're a training firm. We want to introduce you to what this quarterly chart is all about and how prescient and unbelievably accurate it has been for the last 20 years. We do have, and we'll talk about the Trump effect, which occurred over the course of this past year. First time that we've ever seen it occur. The good news was you would not have lost any money if you would have followed this. You would have found yourself getting in this quarter for even more significant appreciation. But we want you to follow these charts with us. We want to teach you about this quarterly chart. If you are a financial advisor, you absolutely need to take this class. If you're someone with a lot of money in the bank, a lot of money in your 401k that really wants to learn how you can protect yourself and your family and really see significant appreciation and get yourself out of significant losses, we want to introduce you to this quarterly chart. It is going to be a special training, of course. There is no fee. There's no hidden agenda here. We are interested in teaching you this material. We do want to know why you want to take it. and why we should share this with you. We don't throw our pearls in front of swine. Not that any of our listeners are swine, just a nice saying from the Bible. But if you are interested and would like to take this class, tell us why, and we'll be happy to review your request. And we've already approved several dozen people to take the class. Let us hear from you if you're interested. You can email us, cw@chartingwealth.com, and we will be happy to let you know if we will be able to provide you with that training and when it will be. And it will be worth every minute of time that you spend on it. And just again, look at how incredible this chart is. The quarterly chart on the S&P, our special proprietary quarterly chart, is amazing. Anyway, we'll share that and more with you in that special training, cw@chartingwealth.com. Tell us why you're interested and why you would like to take it, and we'll be happy to consider you for it. Thank you again. God bless. Let us hear from you. All your questions, problems, concerns, cw@chartingwealth.com. Also, special bonus for newsletter subscribers. You have your bonus broadcast that we recorded prior to this one, answering great questions from fans. So please make sure you sign up for our email in order to be included in that bonus broadcast. That's not made available to anybody but newsletter recipients, and you just go to chartingwealth.com and sign up. All you do is give us your first name and your email address. Again, we don't sell our emails. We don't solicit you for crap. We don't give your names to anybody else. It's just with us. Thank you so much, my friends. God bless. All the best from chartingwealth.com.